They never gave us 10 cents. It was a one-way street. We took in hundreds of billions, and during
Okay, folks, welcome to Sunday Night Futures Live. Thank you for joining in. We have a bunch to go over tonight, a whole bunch of members' chart requests, and we'll go over those. First, we're going to go over some headlines, economic data, some charts, the key chart to watch I'll be sharing with you, and, of course, we will be going over the opening futures action. Let me first say hello to everybody. A lot of comments already. Trader Isaac, for whatever reason, they're blocking you now. Let's show you. All right. Hey, Franklin. Looking forward to a new week. Yep, me too, brother. Amerimigo, hello. Joseph Gardner. Yeah, OPTT. I looked at OPTT. You know what? I'm going to go over that because that broke a couple of support levels, and it was you guys that told me about the Iran crypto purchase, and they're trying to get around the sanctions. So that's why I avoided it. I didn't execute on any of the trades. I don't know if anything's changed. If there has been a change, please let me know. And Trader Isaac, hello. Yes, please. You are up against the POTUS. Subscribe, subscribe and like. Yes, thank you very much. Yeah, Frank, and I'll definitely go over OPTT. Cena, hello, sir. Eric, hello, good evening. Great call on the yield curve. Thank you very much. We're definitely going to talk about that tonight. Do you have any thoughts on buying SPACs? I got to be honest with you. I'm really just, all of a sudden we have SPACs. They've been around for a long, long time, but all of a sudden we have SPACs. So I worry about them I don't know enough right now to feel confident about speaking about them. I worry about there's such a flood coming to market. And to me, that could be a sign of a top. I worry. I'm very skeptical of these vehicles. So there may be some good ones, but I'm sure there are a ton of bad ones. So more to come on that. I know, who was it? Not Warren Buffett. Charlie Munger. He has a four-lettered word for them, kind of like poop. So he doesn't like them. If Charlie Munger doesn't like them, you know what? I have to stand by Charlie. So more to come on that once I learn more. Mr. G, hi. WG Shocker, if I didn't say hello to you. Hello. Pat. Hey, Pat. Matt Carter. Hello. Good to see you. Glad to have you here. Robert. Hello. Tommy. It's been a while. How you doing, Tommy? Todd, hello. Got a nice pop on TLT Friday. You're welcome. All right, let's get to it. So, listen, everybody's going to be talking about yields. It's all about the bond market. To those folks that have been watching these live streams going back, I don't know, over a year now, Thursday nights and Sunday nights, we talk about, especially on Thursday nights, we talk about the yield curve and we talk about the 10-year Treasury yield and how they've been moving up higher. It's no great shock. All of a sudden, because now the market is reacting adversely to them, it becomes news, but they don't want to talk about it beforehand. They don't want to let you know, beware, you're on thin ice. We do that here. So please, if you're not a subscriber, subscribe, hit the like button, share with a friend. It's alternative news media. All these guys on CNBC, Fox News, all they want is a bull market. They don't want anybody coming on bearish, just a bull market. They're not going to tell you, look out below. Things are getting like Wile E. Coyote moment type stuff when you have the small caps on a monthly time frame trading on top of their 2 and kissing the 3 standard deviation Bollinger Band for like 3 months in a row. It's ridiculous. It's not going to last. It's unsustainable. Somebody's got to tell you about it. That's why we use the charts. So it's all about bond yields. Here's the bond yield, 10-year Treasury bond. If you don't have this symbol bookmarked, you got to have it. You got to watch it because we were warning of, let's go to the weekly chart. We were warning about this resistance level here. I drew this line in red several weeks ago, and I said, this is where the markets may begin to tremble at that upper band of the downtrend line. So sure enough, we didn't even hesitate. We just broke through it, pulled back, retested, follow through. I mean, whoa, this is a major, major move. We knew it was coming. Did I expect this blast higher? Not really. Even for me, I was taken a bit aback. And the 1.5 number on the 10-year yield, I've always been saying the last time we hit 2%, the markets buckled. That was well before we took on another $10 trillion and rising in debt. These guys are going to go nuclear now. So these bond yields, they're probably, I think, going to pull back here shortly. They've come too far, too fast. They're probably going to pause. The markets are going to be able to rally slightly. And then once they begin to rip up higher yet again, you got to watch your tech stocks. You got to watch your semis in particular. So there was supposed to be a semi shortage. Those headlines hit the headlines about 2 weeks ago, 3 weeks ago. All of a sudden, you had a spike up higher in the semis. Somebody was doing news plants because now they've broken down on a weekly time frame. Watch the headlines. Usually you're supposed to do the reverse of what the headlines are telling you to do because stories are being planted even on zero hedge, which I'm a big fan of, but watch the news that you're following. So let's bring up the yield curve. Now, the Federal Reserve is talking about yield curve management. What does that mean? They don't want you looking at the yield curve. They're going to manipulate for you the yield curve. Because they know that a steepening of the yield curve means that equities are going to roll over. And they've started. They have started. We've seen breakdowns in a weekly time frame on many major indexes already. So we're a bit extended here. Again, I think that we could pull in on the 10-year yield, probably the 30-year yield. I don't know how long that pullback's going to last. Maybe just a brief while, and then we're heading up higher. Because these longer-term yields, institutions and sovereigns who buy these bonds, they want to get paid more for their risk. So, and the Federal Reserve and Treasury has made it clear, they're issuing more debt. It's coming. And forget about the 1.9 trillion. That's just the beginning. More and more coming. So beware. What did I want to take a look at? Let's go to economic data coming out this week. This is going to be a very big week for economic data. But first, I want to begin with Thursday's price act. Actually, I want to begin with Tuesday's news. On Tuesday, Jay Powell came out. We're not raising rates forever. Wednesday reiterates, we're not raising rates forever. What did yields do? They went higher. They weren't listening. So when you have the Federal Reserve chairman out there saying, we're not raising rates, don't worry about it, and the bond market goes the opposite direction, worry, because the bond market's not listening. And sure enough, on Thursday, you had GDP came out lower than the prior read. This was a revision. But the big number on Thursday was durable goods. They blew the doors off of durable goods. Big spending. So what that means is that you're beginning to see the velocity of money pick up. The economy is beginning to open up more. People are beginning to spend. What does that mean for all those trillions of dollars that were printed? They're now getting cycled. Lumber prices, all-time highs. Wheat, corn, multi-year price highs. So The velocity of money is beginning to pick up. You can print all the dollars you want. If you don't have velocity of money, you're not going to see inflation. You're starting to see inflation. So let's fast forward to look at the core inflation on Friday. Came in 33% hotter than what was expected. Monday, we have the manufacturing PMI coming out. We also have 10 a.m. tomorrow, the Institute for Supply Management. Wednesday, this is where things get really interesting. The ADP report, that's the precursor to the Pimp Mac Daddy of them all. The non-farm payrolls data coming out on Friday. Of late, these have been abysmal. Last week's initial jobless claims came in at 730,000 new jobless claims. They were expecting 845,000. They touted that as a win, right? You still had 730,000 jobs lost, and the last month's read on non-farm payrolls was 49,000 new jobs created. Think about that. So we're printing all this debt, yet people are losing their jobs, people are not getting hired, and they put out this nutty 6.3. Remember, they dropped down the employment rate to 6.3. That's the U3 data. You got to look at the U6 data. These are the people that are working part-time, no longer looking for jobs. That's what you look at, not the U3 number. Unemployment is much higher than what they're projecting right now, or reporting right now. Now, before we go to the charts, I want to go to our sponsor, which is TrendSpider, automated technical analysis. Folks, if you're not using TrendSpider, you should be. Automate your grunt work, speed up your technical analysis, and improve your accuracy. If you're not improving your accuracy while speeding up your technical analysis, you're doing yourself a disservice. But this type of automated technical analysis, your competitors are using it. You need to be using it too. There's a 35% discount code below. Take advantage of it. They have Contrarian. They have, I'm developing Contrarian University. They have TrendSpider University. Find winning chart setups with their scanners. Reduce costly analytical mistakes. Time your trades with precisions with alerts. I'll be using them tonight. Go over to their website. They have a free trial. Go over there. Sign out if you want. Check out their TrendSpider University. They have a lot of tutorials here and really good stuff. Again, 35% discount code below, and take a tour of their platform. Let's take a look at the opening futures action. E-minis are up 1/3. On the lower right here, we have the Dow futures. This is light sweet crude in the center. And VIX is dropping, which is lower right. Let's go to the big chart. The U.S. dollar. The U.S. dollar had a beautiful week last week, I have to say. And when you think about that, more than 25% of all dollars in existence were printed within the last year. It's quite amazing that we've had this big of a rally, but why did it rally? You saw selling in stocks. Money rotated into the U.S. dollar as a safe haven trade. On Friday, they finally moved into the bond market. So right now we're flirting. This is a 4-hour chart, the Dixie, and we are flirting with a breakdown below this breakout point. It's way too early to make the call as to whether or not we're going to break the support level. Let's go to gold. Gold is up over 1/3 of a percentage point, $6.50. We saw a major break on gold last week. Horrible price action. That includes the miners. Very disappointing, whether it's gold miners, silver miners, all poor price action. Sticking with commodities for a moment. We'll go with the metals first. Palladium catching a bid, 0.75 of a percentage point higher. You know, is this a bottom? We don't know yet. It's way, way too early to make that call. We need to see higher lows get put in. We need to see follow through days to the upside on rising volume. We're just beginning to maybe probe a bottom here on these names. Natural gas, gapping up higher, up nearly a percentage point. Rough week last week. We'll see what happens there. We'll keep an eye on that. This is a 4-hour breakout. So we'll watch and see if we can get a pullback and a retest. We already had one, really. This is more of a continuation breakout on natural gas. Let's take a quick peek at a weekly chart to see if there's a trade to be had here. Yeah, we're bouncing off of the weekly 20-period moving average. Looks good. We'll see how it opens up tomorrow morning. Do we hold these gains or do we fade? What else do we have? Let's take a look at light sweet crude. Jesus Christ. It rolled over a bit last week. Now it's up over a percentage point. But we don't know whether or not this rally is sustainable. We need to consolidate and do what we did back here. Pull back, put in a higher low, then begin to break out to new higher highs. Way too early to make a call here that we've seen a bottom. Bitcoin, I want to take a look at. I did a video on Bitcoin earlier. It's on YouTube. I also uploaded it to BitChute if you're on BitChute, because I believe it rallied back off the lows, but still had a rough day. Let's go with the daily chart. Brutal. So we're seeing some buying here. I don't know. I think that it's probably going to head down lower. But if we get around to the 32.5 mark, that's a 50% retracement using the Fibonacci retracement tool from the prior lows. So 32.5, if we happen to break support, maybe we'll hold the support level. But if we don't, if we fail, watch 32.5. All right. Big Bear. Hey, buddy. Randy, hello. TrendSpider is great. Yeah, thank you. Yes, it is great. I live by the alerts. They keep me out of trouble. And honestly, it's the truth. You set the alerts, you forget it. I say it all the time. Set it and forget it. Because if you sit there staring at a screen, you're bound to make an impulse buy or sell. So that's why I like those alerts. And unlike, I got to be critical of Thinkorswim for a moment. I love Thinkorswim, but when there's a lot of volatility, there's a delay in these alerts getting fired off. So I was ticked off about that last week. You don't get that with TrendSpider. They fire off right away. Nate, hello? Butter Stacks. I love that name. All right. Falcon, are you using exponential moving averages? All right, so the only time I use an exponential moving average, it's funny you brought this up, because McCarter left me a comment earlier today about the 20-period moving average. The only time I use an exponential moving average is when we have a stock that's in a downtrend and I'm looking to buy it. And I got this from Investors Business Daily many years ago. I generally don't use it unless a stock is in a downtrend and I'm looking for it to ultimately bottom, pop, pull back, follow through to the upside on volume, and then I use that close above the 21-period moving average on a daily time frame as a buy signal. So that's the only time I use an EMA. Otherwise, it's an SMA. I like the Can Slim model a lot. That's Investors Business Daily. All right, let's take a look at equities. So I wouldn't have been the least bit surprised to see a down open today, because it was a brutal sell-off into the close on Friday. But we're up spot 4%. We have an inside bar. It looks pretty healthy. This is a 4-hour chart, multiple bars already, consolidating here. So we may get a rally. It all depends. Let's just jump over to bonds really quick. It all depends upon yields. Here's the 10-year Treasury note. They are rallying. That means yields are pulling back, and that's allowing equities to move up higher. So we'll watch. Do we break out above this resistance level? Or do we fail? And if we fail, it's not going to be good for equities. Especially high beta, your Neos of the world, workhorse, technology in particular, rising yields, technology does not do well. The Russell 2000, it's up a percentage point. Of course it is. Note how we're in a megaphone formation. Let's see if we get a higher high here. I'm going to set up an alert. Okay. Nasdaq 100. I'll tell you, I get the feeling with the Nasdaq 100, the Tues, that we're doing a dead cat bounce here. They're going to be the first to go if yields begin to tick back up. You saw it here. You're seeing it here. No guarantees. Maybe we'll go to 14,000 tomorrow for all I know on the NASDAQ 100. I don't think that we do. I think if bonds tick up higher, bond yields pick up higher, these are going to drop like a rock. Tommy, Bob, really big earnings week, so first half could be a nice rally on Wednesday night. Could be. It could be. I think that I think that the small caps in particular are very vulnerable, but they're doing well tonight. But we got to keep an open mind. It's very difficult to trade the short side of this market, but I think that we have a couple of things in our back pocket. One, bond yields want to move higher, and two, the small caps in particular are setting up for a serious pullback. So I'm gonna stick with the short side for now. I may have to bail on one, which is Twitter, if that gains strength tomorrow, and move to the sideline, look for a better entry point. But we'll see how we open up tomorrow. Check out copper for a moment. Copper rallying back. Will it hold the support level? Not quite sure. Let's take a look at some chart requests. What time do we have? We'll go to 7 o'clock. We have some time. So the way this works is that I take members' requests first. We'll take super chats. We'll go all night with those. And then we'll defer to the rest of the audience. If we have time left over, we'll be using 7 o'clock as our time to stop. Now, I think this is Nestor that left me this one symbol. Hopefully it's not a typo. Yeah, it's Nestor. I don't know if you're on, Nestor. EQTRF. EQTRF. That is. Okay, cool. All right. All right. So, Altamira Gold Corp. Good day on Friday. I mean, what a horrible day for gold stocks. So, starting off with the monthly chart here, I think you can imagine what my thoughts are going to be, is that we've had a beautiful run here. The problem is that you're seeing major topping action. There's a lot of selling going on. And I would gather from that, you have it's exactly what the problem is. So you have resistance going all the way back here. So these buyers back here from January, July, September of 17, pretty much all of 17, they want their money back. They've been sitting with this waiting to get made whole. They're getting made whole, and they're not looking for a profit. They're just looking to get their money back. They've been looking for 4 or 5 years now, looking at this stock, which has been a red entry on their trading platform. It finally turns green. They're out. So a lot of topping action here. And it doesn't look like there's a sign of abating. Maybe on a weekly time frame, we'll see something. All right, using the automated trend lines, take note. I'm going to click the button. We broke support last week. Now, we do have another automated trend line down here at around 13 cents per share. But we do have another support level that might just hold. See this volume shelf here at around 15 cents per share. That may hold. If that fails, we're coming down here to around 13 cents. Daily chart. A very, very good day on Friday. I mean, gold stocks got clobbered, yet this stock was up. Maybe they had some news. I'm not quite sure. But very, very nice price action. But I would not be a buyer right here, right now. Way too much overhead supply. Allow it to pull back. Get the weak hands out. Get stronger hands in. Take note how, again, the automated trend lines. I'm going to take them off. They gave you a sell signal. 2 of them. One up here. The automated trend line was down here when we broke support. And it hasn't looked back since it broke that support level. So I would wait for those weekly support levels to get tested, and then I would look to open up a trade. DBC. I think this is for Franklin. Yes, Franklin, DBC, and DBA. All right. So, all right. Let's pull back first because these have come a long way. Let's get a feel for how we closed out the month. Not bad. Pretty darn good. I like 1625 as support. It was support all through here. And we have a big volume shelf right there. So I suspect we'll see defense of that mark fairly soon. Yeah. Because last week we saw a lot of topping action. I think we're probably going to get a retrace back down to support. Let's throw up the automated trend line, see what they have to say. Yeah. So take note that there's an automated trend line that coincides with that support level I just drew. Then they have another one right beneath it. We'll stick with this one first. All right, so we're good here. Set it and forget it. Daily chart. So yeah, here's the problem. Again, the value of the automated trend lines. Take them off. Such a time saver. We broke support on Friday. So in all probability, we're going to retrace back down to that 1625 mark. I would wait. You have a daily rising lower band of support in or about that area as well. So I think that that's going to get defended. Taking a look at the seasonality. Going back to 2006, 15 years. March is not a favorable month. It's up only 47% of the time over the past 15 years. Whereas with April, it's a very good month, up on average 67%. So wait for a ruthless sell-off and a setup at a key support level. Then you could ride the rally, or seasonality rally anyway, into April. But no great rush here. Next chart up, also for Franklin DBA. Another commodity play. I suspect it's going to be a similar story. So we broke out above resistance at 1691. You have a slew of moving averages hooking up. They're going to provide a floor at some point. Not quite yet, though. They're going to play catch up with price. Let's throw up the automated trend lines. I know there's a bunch of them. Yeah. So we have a breakout above 1. I think that 1690 on a retrace looks very interesting. Weekly chart. We broke out last week. We don't necessarily need to break this support level to retest 1690 because note, These are declining resistance lines, now support. We could simply spend a week or two consolidating along these support levels. Very little sensitivity. And we're good to go. So we have DBA set, DBC set. Ford, F. Don't like it. Automatically don't like it. Let's go to the monthly chart first. Yeah, so what happened here is that Ford has had a great rally, but now it's hitting overhead supply. Prior buyers looking to get made whole because they've been sitting for a couple of years now in a downtrend. They're getting made whole. It's psychology. They just want their money back. So it doesn't mean anything poor about the company. It just means that technically the shares are going to struggle here. Now, on a weekly chart, we're struggling. We keep hitting this rising upper band of resistance. At one point, we were above it, but we failed to hold it, and that's a breakout point failure. I think that Ford's going to pull back. Perhaps to these rising moving averages, perhaps to a volume shelf. I'd start looking at support levels at or around 965, and on a percentage basis, that's a long ways away. But I think it can happen. Let's take a look at seasonality. March is a meh month, up 53% of the time. April, up 72% of the time. It's the best month of the year going into April. So hopefully you get a sharp pullback in March. Be aware, make note to yourself, April is a great month, seasonally going back 15 years. And that may be a great time to go adding more to your position or opening a position. Daily chart. Yeah, we keep getting rejected here. We need to get the weak hands out. Let the shares pull back. Hopefully they get a sharp pullback. Shake out the weak hands. One way to look at this is this way. Here's the rising lower band of support. If we break this, expect a 9 handle. That's where we're going to go. At a bare minimum, I would look to see whether we retrace back down to $11.25 per share. If it holds, great. If it consolidates along that level on very light down volume, great. You could scratch the itch, but I would keep a tight stop right below. Me personally, I wouldn't be interested until it got down to a 9 handle. Way too much overhead supply. And it's not a leader. It's a laggard. NGA. Northern Genesis. I think I already went over this late last week. Yeah, I did. I recognize this. No data. All right. We have to go by the daily chart. I like the way it's, again, automated trend line functionality here. Take it off, put it on. And we're bouncing off of that support level. Good day on Friday. So what I would do here is if this is going to hold, I would take my crayon out and look for a breakout above resistance. I'm losing it. No sensitivity. Actually, no. 4 hour. McCarter, thanks, brother. What I would also do here is set up an alert. But I would keep a tight stop right underneath it. So if we get a touch or a bounce, that would fire off one alert. Open a position. If it holds, great. If it fails to hold this, stop out with a small loss. Then add more. If it fails to break down and it holds support and it begins to break out and it closes above this breakout point here, add more to the trade. Build up on the position on strength. Don't build on a position when it's declining. McCarter, thank you for the super chat. Thank you very much. VUZI and VISL. VUZI. Vuzix. Never heard of this. All right. So again, the power of the automated trend lines. A couple of things here. One, you saw a tremendous amount of selling last week. Yes, we closed up on the week, but there was a tremendous amount of selling. And there is a resistance level immediately above at, let's call it 1930 per share. We closed out the month trading above the third standard deviation Bollinger Band. So it's very extended. Where's RSI? RSI is at 86. Nothing to sneeze at. Weekly chart. Spinning top formation, but it broke out. But it closed off the highs of the week. So I think the game plan here, because this is an indecision bar. Ideally, it holds the support level. Long entry, tight stop. Other than that, I wouldn't chase this stock at all. Daily chart. Daily chart actually looks pretty good. We're in a very tight wedge formation. This may break out. But I would say this. Keep in mind, I'm going to overlay monthly resistance, okay? This is a daily chart, but I just overlaid monthly resistance levels. So I would be okay with opening a position if we were able to close above monthly resistance. And that's at around 19.50 per share. The note I'm making to myself is watch those monthly Bollinger Bands. We'll see how they open up. Because tomorrow being the first of the month. And I only care about a firm breakout, no sensitivity. And I would watch to see. I want to make sure that we close above that level, not flirt with it and then fade. Wait until that final half hour or trade, ideally the final 5 minutes of the trading day. VISL. Crazy breakout. Let's go to a weekly chart. All right, so you had a reaction to the downside. We were overbought. We broke support. Big down week last week. How much were we down? 23%. Daily chart. All right, so a couple of things here. You had a lot of blue doji star formations. And they were warning that there may be a trend change. We had a short uptrend here. Blue doji, that's the same thing as like a doji star formation on a candlestick chart. These raindrop charts are a mixture of volume-weighted moving average and candlestick charting. So when you get these blue dojis, think about doji star formations, and that means that the trend may be changing, and sure enough, it ultimately did. So what I'd be looking for on this chart is a support of $8 a share holding, because it was support here on the 23rd of February, again on the 26th, and the question then becomes, can we break out above resistance at 352 per share? We do have a bunch of moving averages in here. So I'd be okay with nibbling here, but I'd get more aggressive on a breakout above this resistance level. So that's the play. And again, thank you for the super chat. NGA we did. PayPal and OPTT. PayPal bouncing off the 50-day moving average. Let's begin first with a monthly view. Big topping action, a lot of selling on the month. You had some institutional selling, insider selling recently. Some grants, they have to hold those for a couple of years. But these are directors. So beware. Some institutional selling going on here. All right. Monthly chart topping action. Still in an uptrend. I'd be looking for support at 245 per share. as a matter of fact, I want to know if we break through as well. We're going to keep this active for a couple of weeks. Daily chart. This is one of the stocks on our watch list. We're starting to build up a watch list for those stocks that have great earnings, accelerating earnings growth, great earnings per share, strong ROI. And you can see that PayPal is holding the 50-day moving average. We're not that far away from that lower band of support. Maybe we will hit it. Maybe we won't. Maybe we'll pop up higher tomorrow. But I'm not going to chase it, not in this market environment. So PayPal looking good, but I think it can pull back further to that rising lower band of trend. But beware. You've seen some indexes break their weekly trend lines now, and they're flirting with going into a downtrend. So watch, beware. OPTT. I purposely did not renew my alerts on this because of the conversation that was had that they were looking to potentially do a deal with Iran using cryptocurrency to get around U.S. sanctions. Not a wise move for this company, especially this small company. And we have warships in the Persian Gulf at all times. So I don't think this is a wise move. So I avoided it. And the market's punishing it. Weekly chart. We broke not one support level, not two support levels. Actually, we broke two support levels, broke a third, but we rebounded off of support. So this is a stock that's in trouble. We have lower highs, and we've broken down to lower lows. So the trend has changed. I wouldn't be a buyer unless we began to start recapturing these prior support levels, and that Iranian deal better be fake news or better have been debunked by the company, because if they're trying to evade U.S. sanctions, I can't invest in a company that does that. I really like the company. It flashed a doji star formation last week. That's an indication that there may be a trend reversal and we may pop up higher. But I also want to know if we break the support level. And there you have it. That's OPTT. No great rush. Good doji formation on Friday, no doubt about it. We may get a pop here. But the key is closing above this resistance level. OPTT is not a true renewable energy. It is limited to rovers and sea-bearing tools. It won't be a company that will provide mass energy to everyday people. Agreed, yes. Something about naked calls and puts. Bob, any thoughts on GME? I hear March 15, 16 is the next gamma squeeze. A lot of guys are hoping for tomorrow, though. You know, GME has become a cult following. I think you're playing with fire if you're trading that stock. I'm old school, so it looked as though they were setting up for a Bollinger Band squeeze last week, and they did do that. Same thing, same Bollinger Band squeeze. If you look at a 4-hour chart of AMC, GME, not so much BlackBerry this time, but both of those, they were telling you they were ripe for a squeeze fairly soon. Johnson Oface, are you still short of Twitter? Yes, I am. I have not added to it. It did close above resistance at $75 per share. That's got me a little bit nervous, so I won't go adding unless it breaks. So I might have to stop out of that trade and admit fault. Admit I am wrong. So we'll see. SOS. Somebody was asking me about that the other day. I got destroyed. Yeah, I mean, it broke a lot of support levels here. It looks like 366, give or take a dime, is going to be the next support level to watch. So it looks as though it's probably going lower. We broke support on Friday. So watch the support level here. As a matter of fact, I'm going to bring this down a little bit. I'm going to revise it to $350 a share. That's next support. But I think it's going lower. 3 minutes to go. I want to circle back to Ricardo. I'm not in GME, but I do have AMC and NAKD since early January, hoping for seasonality. Well, AMC, I don't have as much of a problem with AMC because at least it's pulled back to a price that was on par with pre-pandemic levels. So it normalized somewhat. And the option premiums are still pretty fat with volatility. So that's a stock that could be traded. I can't say the same for GameStop. GameStop is still extraordinarily overvalued. So I would be very, very careful. You're welcome, Carter. I said that about, McCarter just said Kramer keeps saying that GME should offer more shares. I said that when they were up at $400 per share. Why not issue new shares? And the company did respond to that. And they said that they didn't want to go to the SEC because they didn't want to get pushback from the SEC. I think that's hogwash. They should have sold shares. That's craziness. That's craziness. You're welcome. All right, DKNG. I'm going to leave off with DKNG. We're going to circle back to the futures action, see if anything's changed. Really a great month, February. We rallied well off the lows of the week, but they couldn't push it positive. I think the play here is that you got to wait for a breakout. or a retrace back down to support. So I create an alert, breakout, no sensitivity. Or a retracement back down to support. And there you have it. I wouldn't buy it here because you'd be buying it into resistance. I'd rather wait for a breakout. I'll pay up a couple of more dimes. I don't care. But I'd rather know it had the strength to be able to break out above this resistance. That would give me more confidence that it's probably going to move up higher. So it looks good. I like the way it rebounded. I went over a couple of these stocks midweek last week, and I did not like them. I think Gamble was one. How did that? I think I have an alert set. But I was worried that the consumer discretionary stocks were getting hammered. Yeah, Gamble popped back a little bit last week too. Not a good Friday though. I think this may pull back further. So we'll let the alert do the work for us. All right, let's circle back to whether or not equities are gaining or losing. First with the US dollar. It's given up some ground since we last looked. Has gold capitalized a little bit? Gold catching a bid here. I'm not confident that this is the bottom. This one bounce doesn't make a bottom. So I'm not confident yet that we've seen a bottom here on gold. We may put in a higher low, but I don't think it's a straight shot higher from here. Too much technical damage was done. Silver, which I skipped silver. Silver behaving very strong. I mean, I like silver better than gold right now. Up 1.5%. But is this a dead cat bounce? We don't know yet. Time will tell. The Russell 2000, now up 1.5%. Very close to taking out my alert. At resistance. What are the VIX futures doing? The VIX is coming in. Bonds continue to rally at resistance, trying to break out now. We'll see whether or not they were able to do that. But we do have a higher low here. And we have now broken out above the pivot point on the 10-year yield. That means yields are pulling back. And that's allowing stocks, the beta stocks in particular, and technology to move up higher. Let's leave it off at the S&P 500. Up 0.75 percentage point, looking good. Poised to break out, unless, of course, bonds begin to roll over. And with that, folks, 7 o'clock, I'm going to say everyone have a profitable trading week. As I like to say every week, I really appreciate you spending your Sunday nights here. Don't forget, TrendSpider 35% off below. Use the link. It's free to our silver and gold level membership, so think about joining the Contrarian Trader. 14-day free trial offer. And everyone stay safe, be well. Talk to you soon. Have a great night.